Thank you, Suni, very much for your time to join Top Investors Talk. So first of all, where am I getting you today?
Well, thanks very much for having me, Ivan. And you are finding me, I am working from home just north of New York City in the United States.
In the investor's crystal ball, there are maybe three main themes of the year 2022: inflation, China, and the virus. So in your opinion, which one will on the top of the three?
Well, you picked the right three, and all three are highly relevant to the outlook, but inflation is the one we're most focused on. Inflation will be the key factor driving how quickly or slowly central banks remove stimulus, and that'll create a crucial part of the market outlook. More troubling COVID variant or the potential for a hard landing in China are downside risks, but I do think there's greater potential for upside across those three in China.
China first. In UBS 2022 outlook, UBS said that the outlook for Chinese activity is far and away the biggest potential cloud on the global economic horizon. Why do you say that?
Well, first, let's remember that clouds don't always mean bad weather ahead. In this case, we're talking about uncertainty. So while we've seen early signs of easing of policy restrictions, the big question for international investors is policy risk, and they'll look for more clarity from the Chinese government. So therefore, how quickly policy is rolled out in 22 or how much of the tightening policy in 21 is eased back a bit, those will be key to the Chinese economy and to global markets in 2022.
How do you see that regulation trend in China in the year 2022? Will that slow, stop, or maybe reverse?
We believe that we're past the most intense period there, but regulation in certain sectors, such as data security, can be quite complex and they take time to formulate and implement. So we expect to see continued implementation of those regulations in 2022. That being said, the Chinese government needs to account for slowing economic growth, and we're already seeing some green shoots in terms of those policy adjustments.
How are you viewing Chinese tech sectors at this moment? Which one will pick, the tech giants, the big ones, or the small and the medium-sized ones?
Yeah, well, we have seen some sharp drawdowns in Chinese tech equities in 21. However, again, current valuations suggest that most of the concerns are already discounted in those stock prices. So while growth may be subdued in the near term, we still see strong growth from these companies over the longer term. Stock prices will continue to show volatility for sure, but we do think there's value in many parts of the China internet sector, especially compared to the tech giants in the US. While the large companies have recently faced stronger regulatory headwinds, and the government is trying to create a better environment for smaller companies, those smaller companies may face other risk factors, including a highly competitive market.
Chinese authorities have indicated that they want to stabilize growth, but do not want to revive speculation, especially in property sectors. What does that mean to investors?
Beijing is keen to ensure stability, and policymakers are becoming more focused on enacting some pro-growth policies. So although we expect first half 22 to remain somewhat subdued, we expect to see higher growth in the second half, aided by presumably a looser fiscal policy. Increased infrastructure spending is likely. The easing of monetary policy, including measures to support mortgage lending and small and middle enterprises, and further fine-tuning of regulatory measures that were introduced in 21. So this should all be positive for investors in 22. And we think the case for investing in China for the long term remains really strong. So there are many good companies which will do well even within a complex macro environment, and there are opportunities in areas that are in the right path of the overall government vision, such as electric vehicles.
In terms of sectors, what is your favorite pick in China?
All right, we like certain companies in communication services, healthcare, financials, and consumer sectors, all for the long term. Authorities are prioritizing the development of other strategically important industries such as semiconductors, life sciences, healthcare, and financial services we think are quite underpenetrated. So there's opportunities there in the insurance segment and wealth management services. And that's as China transitions from being a lower income to a more affluent country.
After the pandemic, the main logic of the Western world stimulus is the growth-inflation trade-off. Do you see the trade-off will be more difficult in the year 2022?
And I think over the course of 2022, we actually think the trade-off is going to become less difficult, right? In our base case, growth will slow, but stay above trend. And most importantly, probably, inflation will also slow. Monetary and fiscal policy support is ebbing across the Western world, as you know. Now, of course, it's different in China where that support is rising, but inflation is also poised to ebb. So remember too that inflation is not necessarily a bad signal, right? Price pressures are a symptom of economies maximizing their productive capacity and a signal that more investment is needed as long as the demand backdrop is strong. That's the key here. And we do think that it is.
Yeah, the key issue of 2021's resurgence of inflation involves the very heart of capitalism, which is who is going to win the battle between labor and capital.
It's a great question. The world is watching, right? Because capital has won the battle over labor for decades. And it's difficult to bet against such a strong trend, but I will say that pieces are in place for at least a pause and perhaps a reversal in that trend, right? Increased populism around the world is shifting politicians in the direction of redistribution. There's fiscal transfers happening across the Western economies, and that potential shift in favor of labor could create more structural upside pressures to inflation, right? So more money in the hands of lower income folks will tend to spend more than higher income people, and higher wage demand. So I think the jury's still out, but I think we're leaning toward labor.
So you mean after the pandemic, we will live in an environment with a little bit higher inflation than the pre-pandemic?
Look, I think the inflation, if it lasts longer than we initially predict, right, we're going to remain challenged for that for the foreseeable future. So certainly through 2022, right? Bond yields we do expect to go higher, and central banks will be more aggressively tightening their policy, which would be negative for equities, right? But again, there are ways to play that within the market. So we saw this in September. U.S. Treasuries sold off, stocks also sold off, but energy equities within that were the only sector of the market to post positive monthly returns. So again, you're in an environment where you need to be very careful about the sectors you pick, and you need to be very careful about those names within each sector.
What is the play here? Actually, my question is how to turn inflation into an opportunity.
Well, again, it depends where you are. So, diversification and particularly commodities is a great way to play inflation. You've seen that again. We talk about September and the energy stocks playing. So again, you're going to continue to see what is an age-old approach to battling and finding opportunities in inflation: diversification, looking at opportunities to do some fixed income products or rebalancing in your portfolio, and then again those counter-cyclical stocks, commodity type stocks, which always play well in an inflation environment.
The recent Fed minutes shows that they want to increase rates earlier and faster, and we saw a sizable market correction. So will that be a starting point of some kind of rotation?
Well, we've been waiting for the rotation out of equities into fixed income or a more balanced portfolio for years. But I think the story for equities is still a strong one. The fundamentals behind the market are still strong, and that will resist that move over into fixed income products where rates are still low. By historic standards, rates are still very low. So it's hard to find that area. In
the equity market, the rotation between growth stocks and value stocks, maybe.
Oh, all right. Sorry. Yes. So we find value more attractive than growth stocks at the moment, for sure, right? The global economy is poised to enjoy another year of vigorous expansion, but it's supporting cyclical earnings and bond yields as they look to rise. So in that case, I'm going with the value stocks.
So in the year 2022, who will you bet, Elon Musk or Warren Buffett?
I would never bet against the sage of Omaha. So I'm a Warren Buffett fan.
Let's talk about ESG. What makes UBS asset management different?
Well, I'll start with the fact that we're not newcomers here. In fact, we're approaching the 25th anniversary of our first global sustainable equity fund. So we've been doing this for a very, very long time. But I'll give you an example. 2017, we launched our climate aware strategies, which was the ability for investors to customize the glide path around climate. At the time, you could choose a 2% or 2-degree glide path versus a 1.5 Paris-aligned degree glide path, but obviously now everybody moving to the Paris-aligned strategies. But the ability for investors to customize their approach, the ability for investors to choose which of the 17 SDGs they want to focus on and build a product or a portfolio around those are the things that UBS Asset Management can do that I think makes us very different.